Okay, so we talked about the stock market just a little bit when we talked about the rise of big business. We talked about when corporations were formed. And this is going to lead us into the activity that we're going to be doing in class tomorrow. And so this is just the basics of looking at the stock market. So again, this assignment is going to show us how to just look at the basics of the stock market. This is a really simplified form. So again, what a stock is a stock is just a small portion of a company. When a company gets large enough, they can offer a portion of their company to the public, and people can buy into that company, and they kind of share in the profits that company has. So if the company does well, that means that you will make money. If the company doesn't do well, you might lose some money. And the benefit for the company and the investor, the people buying the stocks, is for the company, they have more people putting money into their company. For the investor, the people buying stocks, hopefully you buy stocks at a low-ish price, and over time, typically people keep their money in the stock market for years. Over time, that money grows, and you are able to cash out on your investment with more money than you put in. Just a way to grow your money, essentially. But it is a risk because sometimes you put a lot of money in and a company ends up not doing as well as you thought they were going to do. So if you're looking at this sheet, on column A, there is a whole bunch of different companies. These are publicly traded companies on today's stock market. Okay, so we have Apple, Microsoft, ExxonMobil, Google, Ford, Walmart, Berkshire Hathaway, Tesla, Facebook. So companies that you should be mostly familiar with. And in this column, we are going to find their IPO. An IPO is the initial public offering. So the day that this company went public, how much did one share of their company cost? That's what we're looking up here. Okay, and then we're going to be doing this scenario as if we were buying 100 shares of this company, because typically you don't buy just like one share of a company, like big time investors buy hundreds at a time. So, but we're going to see what it would cost for us to buy 100 shares at that IPO. And then we're going to look up their value today and see how much that investment would be worth. It sounds a lot more complicated than it is, so I'm going to show you how to do it. So you guys can just follow along and start filling this in with me. Okay, so for Apple, for the IPO, so how we find that, we're going to go to Google. It's really easy. I'm going to put in Apple IPO price. It's helpful if you put the word IPO and price in there. I hit enter, and the very first thing that popped up was their IPO price. It was $22 per share. If it does not come up right away here, usually you can go to this people ask section and you can use one of their drop downs. So this one doesn't have it, but how much money would you have if you invested in Apple? But sometimes it'll have the IPO price here. But for this one, it just came up right here. So we're going to go in this first box and we're going to write $22. That's how much one share of Apple cost. They went public in 1980. Okay, so to calculate 100 shares at the IPO, we just multiply by 100. I picked 100 because it's a really easy number to multiply by, because you just add 2 zeros to whatever your initial price was. So it would have cost in 1980 to buy 100 shares of Apple, it would have cost $2,200. Okay, we're going to look up their stock price today. Again, it's really easy. We're just going to use Google. Instead of putting IPO price, I'm just going to type in the word Apple and the word stock behind it. The very first thing that will come up is going to be their price. Okay, you'll know it's their actual stock price when it has like these graphs and stuff by it. The market hasn't started today, so you don't see any numbers over here. But typically these numbers will be red or green, telling you if the value is going up or down. So I'm going to round this number to the nearest dollar. It's going to make it easier to multiply. So we're going to say $142 for how much their stock is worth today. And then again, you just multiply that number by 100. 142.00. 14,200. So that's how much. Column E would be called equity, how much equity we have, how much we put in plus the profit. But we want to know just how much we would profit or how much the investment is worth. So you have to subtract what you initially put in, okay, because you paid 2,200 for it. Today it's worth 14,200. So you take 14,200 and you subtract 2,200, which equals an even $12,000. If you invested in Apple back in 1980, today you would have $12,000. Now, Apple, I probably shouldn't put as my first example because really, if you put in 100 shares in 1980, you would have way more than $12,000 today because Apple has undergone some splits. Okay, that means their stock price got up so high that they decided to do what's called a split, which means they split their shares. So if I had 100 shares at that time and they did a split, then I would have 200 shares and they would be at a lower price. And they've done that multiple times. So really you would have more money than that. But we're going to just do the simplified version. Okay, let's go ahead and do, let's do Microsoft. So again, I'm going to go back to Google and do Microsoft IPO price. And Microsoft was $21. Microsoft went public not long after Apple. Apple was 1980. Microsoft was 1986. If you don't know, Microsoft is the company that is owned by Bill Gates. Okay, so here we put 21, 21, and then multiply that by 100, 2,100. Look up their share price today, see what they're trading at. I'm going to round this so we can see today they're at $232.90. If I round that up to the nearest dollar, I would get $232. $232. Another multiplier, $23,200. So that would make our share price or our investment 2,100. Leave?
Yeah.
Okay. So you'll see if you get a negative number for some of these, that doesn't necessarily mean that you were wrong or you did it incorrectly. What that means is that what the stock is at today is lower than what their initial public offering was. And that might happen with some of them. Also, yesterday, the stock market dropped quite a bit. So some of these numbers may not be quite as high as what they were on my Monday or Tuesday class. Let's do one more. Let's do Tesla. Tesla has been a steadily increasing stock over this past year because of the move to more electric cars. So let's go to their IPO price. $17. Yep. Sometimes you like here, I just have to kind of like read through it to figure it out. So Tesla was originally offered at $17, making that initial investment $1,700. And let's see what they are at today. Pretty high. Today it's trading at $864 a share. So that's a pretty big jump. Wait, what did I just say? $864 a share. Okay, so I multiplied that one by 100 and then I just subtract.
think it's 84,700.
84,700?
Yeah.
Okay. So here we can highlight, if you're looking at all these, like which one would be the best investment overall. Tesla's probably up there for best investment if you were able to buy their IPO. Okay, so before you guys get started working through the rest of this, Berkshire Hathaway, you're going to have a really big number. Berkshire Hathaway is a holding company. So it's a company that owns a lot of other companies, which means their stock price is really high. Nebraska Furniture Mart, Heinz, some sports, Duracell batteries. They have like a huge amount of different companies. It's owned by Warren Buffett. So you're going to see a big number there. You'll probably see a pretty big number for Amazon too. That's one that's been a pretty high trading stock recently. So after you get done with this chart, you're going to choose 3 companies that you would invest in. So think about which ones you think are the best investments from this list, meaning starting high, ending low, or starting low and ending high. And that's what you want to fill in here. Once you have done that, you can just go in Schoology and hit the submit button, and then you are done with the assignment. So you guys can go ahead and start working.